Hello traders at CMC Markets. This is Trevor Neil of RRG Research presenting to you today from London on Friday 24th of May 2024. Today we're going to start by looking at global indices as usual, and then I'm going to concentrate on one particular aspect, and I think something which is going to present an opportunity over the next few months. And going to go into these rather deeply. First, here is the relative rotation graph of major stock indices versus, in the center here, the MSCI World. The S&P very close to it, a big constituent of it, and most of the major indices are close to it as well. But there's some outliers. Let's first of all look at the US. We've got the FANG stocks here. Furthest to the right, so on a relative basis, the strongest group. The hooking round a little bit there on this weekly sampling. The Nasdaq actually has fallen back into the lagging quadrant here, unusual place for it. The Dow also there. So on a relative basis, the shine is gone off these US indices, even the technology. Not to say they're going down, they're not. I'm talking in a relative basis. Relatively, we've got the DAX not pointing in the best of directions. Northeast would be the best direction. Stocks the same. CAC here, and the FTSE coming around very strongly here. Now, note the long tail and the fact that it's relatively high, which means with strong momentum. So we've had that break to new highs in the FTSE, well delayed, and a bit of a catch-up operation, getting some attention, but whether that's really deserved because it's just been such an underperformer for so long. But that's changed now, and we're coming up, and it looks as though it's going to move across 100 here into the group of the leading quadrant. But here, very interesting here, the best shape and position on the board at the moment is the Seng. It's heading northeasterly, that's easterly, strengthening, northerly with positive momentum. It's got a long tail, it's doing it fast, and it looks as though it's heading towards the leading quadrant. Shanghai too, but it's just dipped down here, and you'll see when we look at the graph that it's had a wobble since its start to move up on a relative basis and also on an absolute basis. Now looking at the same picture on a daily sampling, got a slightly different picture here. Firstly, S&P right in the middle, that's no difference. Nasdaq improving, FANG improving, both with northeasterly directions there. The Seng right furthest to the right, but a bit of a wobble going on there. A severe wobble going on the China index, a wobble going on the FTSE, so after the break to new highs, a wobble there, and the Nifty and the Nikkei coming up quite nicely but early in the improving quadrant. Nifty not yet there, but with that long tail moving swiftly, it looks as though it is going to improve on a relative basis again versus the MSCI World. So this is now the daily perspective. Let's look at the Nasdaq. Nasdaq just recently broke to another new high by breaking this 18,480 level. That was breaking the 20th of March high there. We soared away, and then yesterday we soared up to a new all-time high of nearly 19,000, 18,915. But big reversal here, key reversal if you like, or in Japanese, a bearish engulfing line. And if we confirm that by going through the low today of 569, this would infer 3 to 5 bars of weakness, which at the very least should be a return to the break point here at 18,476. The MACD is positive. The RSI is correcting this overbought condition. So the trend is strongly up from a long-term perspective and also from a intermediate term perspective, but in the short term it's likely to pull back, and we shall see whether how that stabilizes. Here now is the FTSE, which has had a terrific run since the big break of up through 8,000 and a new high, and soared away up to 8,000, nearly 8,500, 474. And then now easing back. We saw that on the RRG chart, didn't we? We saw that turning around in the direction actually to the southwest in it. So it's losing relative performance against the MSCI World and momentum as well. That we can see here in this graph. I've put on Fibonacci here, and you can see a 38.2% retracement be to 8,213, 50%, 8,132, and 61.8% back to 8,051 and the previous high, the breakout high, really. So which is it likely to do? It's difficult to say. I've got to be honest, but there is momentum on the downside, which looks as though it's likely to extend the move. The MACD has crossed here, longs here. Market's definitely gone on the RSI. We've come down below 50, so the indication is that this will extend further, and so lower before returning upwards. And note these Fibonacci levels, these are likely levels to hold. If we did hold at 8,213 to 38.2, that would be very bullish, wouldn't it? It means that when the bears have had control, they've achieved very little, and therefore the inference is that the next move would be large, 50% less. 61.8, saying that that's telling us the bulls struggled to get control again, and therefore the next move will be modest, and it will probably find it hard to get through the 8,474 high. We have to see more data, more days of trading to see how this is going to go, but in the background the uptrend is still strong, and it should regain its composure at some level somewhat lower than where we are now. Now, this is a monthly chart, something that we don't look at too often, of the Shanghai composite. And we've seen that while the rest of the world has been enjoying massive bull markets, particularly in the US, this has been really almost the worst performer. Maybe the Hang Seng might take that prize. But it's changing now. In the last few months, we've come up very strongly, approaching this long-term downtrend. Even the monthly MACD is close to crossing here now, having given its last crossover to the downside in December 2021. Now this looks as though this base is over and is starting to move up. So moving now to the weekly chart. And so here we've been moving up in recent weeks, since February. The MACD has crossed upwards. A little bit of loss of momentum, which we saw on the RRG chart as we approach the resistance of this downtrend line. I've drawn it as a dashed line because it's not perfectly lined up, and therefore it's rather imprecise here, but it's around 3,200 currently. So it's approaching resistance. It's the downtrend resistance, also this kind of head and shoulders top here as well. On the daily chart, we see this is the rise from February here. We paused at this point here, and the MACD came down, it went negative, and then crossed above its signal line again here, and it's just crossed down again. So the inference is here is that we're likely to pull back a bit more, probably since the overall trend is up. It will hold at support at around 3,080. Now, looking at the Hang Seng, the Hong Kong index, this again, starting off looking at this from a monthly perspective. This has been the worst performer of the major indices in the world for the last 2 years, virtually the last 2 years. It's been in a strong down trend since beginning of 2021, and it's gone down and down since, breaking important lows one after the other, and then coming back to retest this low here. But in the process, it has produced a very clear downtrend line. Now this one I'm not drawn dash because I think the points are good. 1, 2, 3, 4, and a break, and the break is impulsive here. The MACD has turned up. So let's break this down, just look at this bit here using the weekly chart. Now this is a weekly sampling, and here you can see that downtrend, 1, 2, 3, 4, break, and we noted this. We've been noticed this turn on the RRG chart. It started in February and it's been going up on a relative basis very well in a bull market in the whole world. This has begun to recover, and of course it's got big recovery potential. We've got on this week, we've got a pullback on it, but on the weekly MACD, the gap is widening, so that's increased momentum overall. We've come towards some resistance here, which I think is having its effect, and we have gone up a lot in a very short period of time, and we were approaching the next resistance at 20,355. So we've got a wobble, if you like, in this strong bull move here. Let's break this down to the daily chart and see if we can see where this might. Now here we are on the daily chart, and once again we turn to Mr. Fibonacci to help us in these sort of occasions when we have retracements in bull markets. It's doubtless a bull market here. We had the last trigger from the MACD was in here, which was excellent. Now it's crossed down. How far is it going to come back? The first level, 38.2% level, is at 18,323. 50% is 17,800, and the 61.8% level, where the support is very strong indeed, is at 17,400. Let's look at the RSI at this point. It's come down very sharply from a bearish divergence, in fact, very sharply, reading now 42, below the 50% point. So as I said before, if it turns up, the RSI turns up through 50 from below in a strong bull market, that I think is a completed setup to participate on it, on the upside for it. Where is it going to happen? I think it will be close to one of these levels. The higher it is, so if it was 38.2, the more bullish would be the implication of the next run. So the trend is strong in this market. So watch it closely over the next days and weeks to see the stability come in. It could even come in here if it was very bullish in this little consolidation here. That'd be very bullish indeed if it held above the 18,350 level. So we need to watch, but it's looking like a major setup. I'm excited about this, and I want to show you some other reasons why I am. Bull markets are born out of pessimism. Now, the pessimism in the China large cap ETF, the FXI, which is the iShares China large cap ETF. So we've been going down here, and this is the little run up that we've seen. And you see here the pessimism, short interest. So why people who are short of this ETF is at a very high reading. And you see here, the last time it was a reading like this, the time before that, have all been at significant lows. People get most pessimistic at lows. So bull markets are born out of pessimism. Now, going to the Hang Seng, some long-term technical things to note here, that it is down 53% in a period of 3 years. It's down 53%. This is nearly identical to 2003, when it also fell half over a period of 3 years, and then it made a low. Two gaps remain open below the 200-day moving average. These are breakaway gaps in my opinion, and a golden cross of the 50-period moving average crossing up through the 200-day moving average is pretty imminent due to this run-up that we've had, despite the recent softness in the market. So these long-term indicators and this historic move and duration of the move, percentage move and duration of the move, indicates that a major bottom may well be in place. Now, a lot of pessimism in the market, but what's the smart money doing? This is the holdings of David Tepper's Appaloosa fund. This is a huge $6.7 billion fund. His biggest holding is Alibaba, BABA, which is 12% of his portfolio. Chinese stocks, highlighted here, account for 25%. That's a massive bet on China being taken out by this mega hedge fund manager. Another mega fund manager and successful fund manager is Michael Berry. He has 22% of his whole portfolio, which, as you can see, is very concentrated in just 3 stocks, JD, BABA, and Baidu, all Chinese stocks, 22% of his whole portfolio. This is also a big bet. So I would say that the smart money is going against the consensus, which is expressed by the shorts in the ETF. And this is a very characteristic, isn't it, of turning points in the market. This is why I'm excited about it, and I'm doubly excited that it is pulling back, because although it's shot away, it looks as though it's going to set up to present us with a better opportunity. So let's watch this very closely and get our timing right. I thank you very much indeed. I hope you found today's session helpful and useful, and I've enjoyed presenting to you. So this is Trevor Neil of RRG Research, wishing you all the very best, and may the trend be with you. Goodbye.